Good morning traders, welcome to the Phoenix Blue morning update for Friday the 11th of March. Only one thing really to discuss today, that being the stimulus measures announced by the European Central Bank, the ECB, yesterday afternoon. Yesterday we discussed the market's expectation versus what could or would actually be delivered, and we'll look at that in more detail shortly. But first, over to the news announcements for yesterday and the day ahead. This is the ECB announcement. The interest rate, the minimum bid rate, reduced to zero from 0.05%. This particular reduction came as a surprise to the markets. We also saw positive unemployment claim figures from the US coming in at 259,000 increase versus a forecast 272. Today, not a lot, but we have the Canadian dollar employment change and unemployment rate at 1:30 this afternoon. More significantly over the weekend, 5:30 a.m. on Saturday, we have Chinese industrial production. One thing to note here is this is actually for a 2-month period, so slightly more significant than normal. The reason for that is data wasn't released in January because of the week-long Lunar New Year holiday in China. We still have our eye on the FOMC statement on Wednesday next week and the economic projections, so that will stay there highlighted until that event passes. But first off, over to the euro and the result of the stimulus measures announced by the ECB yesterday afternoon. Well, this is the daily bar, and what you can probably see is this came down on the initial announcement quite dramatically to previous lows at this level here, and then reversed completely to go completely in the opposite direction. We'll look at exactly what caused this in detail in a moment, but we've got the 15-minute chart to show you. Here we've got the announcement, the stimulus measures announced, the market acknowledging that. Then we have the press conference, and then we have a crunch moment where something was said which changed the whole picture for the markets. So over on the dollar, naturally, when we have something happening on the euro, we obviously have something which happens in reverse on the US dollar. So again, we had a nice push up initially of dollar strength up to the previous highs here, and then a completely reversal of sentiment, so that down to lower than we've had for a couple of weeks in this zone that I've been calling dollar neutrality. If we do continue short on this and we break this level, we'll even come into a zone of dollar weakness. The net result of this, however, is going to be in the short term, ranging markets, more difficult to trade, less opportunities, fewer trends. We do look ahead though to next week and the FOMC statement. That may just give us the dollar strength that the market is really looking for in order to give it some true direction. So back to the ECB, what was actually announced as stimulus measures yesterday? Well, the first thing was, and we've already seen on the news, was the minimum bid rate was cut to 0% from 0.05%. That was unexpected. The overnight deposit rate for banks and institutions was increased, or was cut rather, whichever way you want to look at it, increased or negative, to minus 0.4 from minus 0.3. That means it'll be even more expensive for the banks and institutions to leave money with the ECB overnight. So it's actually costing them. The intention is that it would encourage them to invest money in loans to businesses and individuals to generate growth and inflation in the Eurozone. Marginal lending facility was another cut to 0.25% from 0.3. The monthly asset purchases, this is the quantitative easing, the buying of bonds, etc., raised to $80 billion euros a month from 60 billion euros, at the top end of any expectation of the markets. And also some additional long-term refinancing operations going forward. So this was the news release. This over-delivered on what the market expected. This gave us the dollar strength, the euro weakness, and the big move in the markets. We then had the press conference and the key statement from Mario Draghi, the ECB president, who said we don't anticipate that it'll be necessary to reduce rates further. This was interpreted, I believe, by the markets as we can't do any more now than we're doing in respect of rates and asset purchase. So that went from being the desired effect from the ECB in terms of weakening the euro to the exact opposite, which is why we had the huge move long on the euro and euro strength, dollar weakness following that statement. And it's just that statement, and I'm sure you wish he'd rephrased it this morning, but in the short term that has had the opposite effect of what was intended by Mario Draghi and the ECB. What does that mean for our trading? Well, yesterday we had trades in the market through the announcement on the pound, on the Australian dollar, and also in gold. All three of those had stops at break even, so we had no financial risk in the market. All three were inevitably stopped out by that market volatility. The only interest we have in the market today going into Friday is we have an order still in place on the US dollar yen pair, which is at this level here where we've seen Bank of Japan intervention previously. We anticipate that if price reaches this level again, which was potentially an effect of the announcement yesterday, had it followed through with dollar strength, that Bank of Japan would look to defend their position at this level again. So that's the only interest other than our ongoing cocoa commodities trade that we have in the market. Quick look at how what yesterday's events were reflected overnight in the Asian markets. Well, in China, the US dollar Chinese yuan exchange rate, it looks like the Chinese government have reiterated that they intend to maintain strength of the yuan against the dollar. We're right down at the lows on the chart of this year, this being the lows of 2015 also. Over on the Shanghai Composite, not a lot to report there. We had a gap down and a bullish day. More bullish on the Nikkei after uncertainty prior to the ECB announcement yesterday. We had a nice strong bullish day above our 2015 lows. Okay, so that concludes the week. As you can see from what I've said a moment ago, not a lot of interest until the markets absorb and digest what happened yesterday. We'll be sitting on the sidelines. We'll be analysing our charts over the weekend and looking forward to the week ahead, and we'll come to you on Monday morning and give you some insight into how we see next week playing out and what the opportunities there might be. As always, if you want to know more about Phoenix Blue, how we trade, just email us at info@phoenixblue.co.uk. Okay, thank you very much for listening, and we look forward to speaking to you again on Monday morning. Take care. Have a good weekend.